Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Databricks raising over $4 billion as its valuation skyrockets to $134 billion. We have the details on the relentless investor demand for AI-oriented tech companies. Plus, we talk the future of US-China tech relations with Jacob Hellberg, Undersecretary of State for Economic Affairs and founder of the Hill and Valleys Forum. This, while shopping on China's TikTok Live is catching on in the US. We'll explore how big the experience might become for users. But first, we talk about not particularly large moves in the market right now. We are unchanged on the Nasdaq 100. It is a noisy jobs report that we tried to digest, but it does come across as a slowing data set that we see for non-farm payrolls. Unemployment ticks higher. The market tries to digest. Bitcoin, though, just ticking up about 2%. We're at 87,962. It has been under pressure over the last few trading days, and in fact, could be the fourth ever annual loss for Bitcoin more broadly. But as we see nervousness around the overall public market phase, what about the private market phase? Databricks, another tell, raising over $4 billion in a new funding round that values the private software firm at $134 billion. Bloomberg's Brody Ford joins us now to discuss what just seems to be relentless. Even though we have AI anxiety in the public markets, we are all in the private sector, it feels. What a big valuation jump. I mean, Series L, is it?
Yeah, right. I mean, this is one of these companies that, you know, for as long as I can remember, an IPO was 6 or 12 months out, but they just keep raising money from the private markets, and it's clear that private investors are happy to keep giving it to them. Right now, if you're able to tell an AI story, and for Databricks, that is, we're going to get all your data together and make it easy for you to run LLMs on it, then investors will be lining up. And I mean, this is a company with very clean financials, with a lot of momentum, and so, you know, my guess is in 6 months we'll be here again talking about the series, whatever letters after L.
Maybe it gets to Z. Ali Ghodsi has said, look, I wouldn't be running a cash positive business if I didn't want to be tapping the public markets at some point, and it seems to be trying to also do secondary sales for employees. They are a competitor of Oracle and Snowflake in the public markets. Again, we're worrying about Oracle and exposure to leases for data centers. How much anxiety are you hearing about around Oracle?
So Oracle disclosed a big jump in its leases. In a 3-month period, they inked $150 billion in leases.
150
billion. And of course, that's over the next 15, 19 years, but you break it down, that's what, around 16 billion a year in lease payments for the coming decade and a half. That's significant. That's a lot of money that, you know, was not necessarily known about. We knew they were leasing data centers, but probably not quite to this scale. And so it's just one more data point that's giving folks indigestion about how much is it going to cost to really get the AI data centers up and running.
Indigestion's a nice turn of phrase for it. Brody Ford. We'll see how this market digests as we enter the end of the year. Let's get more of a market perspective on that. Let's go to Carol Schleif. She is the Chief Market Strategist at BMO Private Wealth. Carol, that anxiety around Oracle, around companies that have been tapping the debt markets to finance the AI, focus on infrastructure, do you think it's the right moment to be going into these sorts of names or to be pulling back?
I think it's very interesting because, as you know, there's been a lot of chat on the street, if you will, about are we in a bubble, are we not in a bubble? But the fact that investors are being very discerning, they're putting money in private companies, they're putting money in some of those public companies, but then they're also pulling back from companies where they're not necessarily approving, if you will, of the total package or don't like the surprises for increased spending or increased commitments. And so that discerning nature is really constructive. And we are big believers. In fact, one of our core big 3 macro themes that we'll be introducing in our capital market assumptions is Industrial Revolution 4.0. And we think AI is just part of it. There's a lot bigger, broader spend, but we are definitely in a revolution that's taking this economy and putting it in a whole different place.
I mean, Carol, go deeper on what discerning is. Discerning $134 billion valuation for a private company that, agreed, has a revenue run rate of some $4.8 billion, an $800 billion market valuation for SpaceX in the private market, so wants to be worth $1.5 trillion when it IPOs in 2026. What spells out discerning to you? What are the financials you need to see?
I think discerning spells out somewhat, if we just take the public markets and we look at, for example, when you had 5 of the Mag 7 all report in the same week, and they all, for the most part, beat expectations, and yet some stocks rallied and some declined because of investors listening through to the story. So there's a piece there where investors want to participate in the industry, in technology in general, and they're trying to figure out where. I think there is always that allure. It's tough to get your head around the financials, even though a number of different entities now are trying to provide us index on private companies. And I saw last week that the CBOE and others are looking to want to write options and futures on private companies. So there's different ways to participate in it, but investors want a foot in that market because I think for anyone who lived through prior periods, you don't want to miss out on not having everything on the sidelines.
But Carol, is that democratization or is that frothiness and a desire to just get in on super high valuations?
Yeah, I think we're still trying to figure that out. For me, it's a way of parsing risk in different places. It's sort of like, too, that we've seen this evolution of the prediction markets, where in the old days, you had your traditional 60-40 portfolio. If you were nervous about markets, you had to trim equity exposure. Now you have different ways to sort of execute on that risk nervousness. You might go buy a levered ETF, or if you own a highly concentrated position in one name, you might go out and say, well, I'm going to buy an option or a single strategy ETF or a single stock ETF on that's levered to the downside just to offset some of my potential risk. So there's different ways to play it, which we're still trying to figure out, does it get frothy? And frothy gets when everyone runs in the same direction and we push these things all parabolic. And despite the fact that they've been running for, 3 years now, they're not parabolic yet.
Yeah, and therefore, is the proof point yet again earnings season? Is that where you start to see that actually valuations are in line, because the PE valuations aren't out of whack if you're really seeing the revenue that they're bringing, and more broadly, we see productivity broaden out?
Yeah, I think it's very interesting because actually when you looked at the last earnings season, when you got to the end of it and you looked at forward earnings, NVIDIA was trading with a lower forward PE ratio than Walmart was. And so part of that is the movement of those earnings. We need to get, for all of us, I can't wait till we get into the December report season. Sooner or later, we will have some sort of a handoff from all the focus and concentration around just those 7 or 10 or 15 names. And we do need to see more broadening in the markets because there's been a lot of interesting stuff going on in a lot of other sectors as well, or some that are second and third iteration of related to technology and some that are totally unrelated, but are benefiting or will benefit from increased use of robotics and technology and down the road when we have a breakthrough in quantum.
Carol, we're already excited for January 20th when Netflix kicks off our tech earnings season. Wishing away our end of the year, but it's so great to have you on to really push us forward to what your key areas of focus are. Carol Schleif, always great on the show, Chief Market Strategist at BMO Private Wealth. Coming up, we're going to be joined by JetBlue CEO as the airline prepares to open its first airport lounge. This is Bloomberg Tech. JetBlue, well, it's preparing to open its first airport lounge just ahead of what's expected to be a busy holiday travel season. Bloomberg's Lisa Abramowitz joins us now from John F. Kennedy Airport with a very special guest.
Thank you so much. Yes, Caroline, I am here with Joanna Garrity, the CEO of JetBlue, in the very first lounge. It is fashioned like an Art Deco New York City apartment from the 1940s, 30s, 70s, 30s. Yeah. Okay, I think I got it right. Joanna, thank you so much for being here before the launch later this week. I want to start with just how this fits into the strategy of JetBlue right now to make the airline truly profitable for a sustainable period of time.
Yeah, thanks for the question. Great to be here and have you in Blue House, JetBlue's first foray into lounges. This is very much part of our Jet Forward strategy. We've been working very hard for the last several quarters on really turning towards premium and trying to make sure that we're offering more opportunities for customers who want to pay a little more. And the lounge is part of that. our transition to a first-class product next year, a domestic first-class product would be part of that. Our Premier card, our Even More as a cabin, and really excited to start seeing all of that come to life in 2026.
All of the big airlines have talked about loyalty and how important loyalty and premium offerings is to their profitability going forward. How is it different for JetBlue? Because there isn't the sort of obvious business customer that typically fuels the loyalty offering.
I mean, we're a leisure carrier. We tend to get, a nice share of business customers because they love the product. We're back at the top for Net Promoter Score, so really proud of that. But at the end of the day, this is really designed around trying to make sure that customers who travel for vacation have a reason to come back again and again, and providing them with a little oasis of peace. And really through our loyalty program, we want to reward people who choose JetBlue because they love the product, the service, and what we offer.
You have already offered Mint and other premium rollouts. How has it been going?
It's been great. Mint's been a very strong source of revenue for JetBlue for well over the last decade. And so we're not new to this. We have a brand that, definitely associates with more of a higher end leisure customer, providing more to customers at a very reasonable fare. And we want to make sure that we offer something for everybody across the full spectrum, whether you want sort of a dialed down experience, still free Wi-Fi and great legroom and great snacks and drinks, TVs. But then if you want to pay a little more, you have the opportunity for a lounge, our Mint class for transatlantic. And then when we launch domestic first later this year, that's going to be a great product offering for customers who want a little more. So
I was shuttled into here through very long security lines and lots of people with screaming children trying to get to different destinations for their warm holidays. This is the busy season. How is it looking in terms of demand, given the fact that there were some hiccups in the past couple of months, but at this point, people are getting back to what they originally had?
Yeah, 2025 has been a very tough year, whether it was the macro setback or the government shutdown or the list goes on and on. We're really looking forward to the holiday season. Bookings are coming in strong. As we go into 2026, we're optimistic that the consumer is healthy and that we're going to start really ramping up the initiatives that we have been working really hard for the last year to execute to and seeing the benefit as we move through 2026.
How long do you think it'll take before you start to actually turn profitable and sustain that?
Our goal next year is to break even from an operating margin perspective, and that's the first step back to profitability. We have a great team here. Everybody's pulling for us. We're doing all the right things, whether it's our focus on operational reliability, Net Promoter Score, all of the premium products that we're launching, our laser focus on costs, and really trying to make sure that we're delivering a great product offering for customers, because JetBlue has this wonderful brand and this sense of people want to love us and they want to see us succeed. And 2026 is going to be our year with everything we've put into place.
Because 2025 was not the year for a lot of airlines. There were a lot of issues. And you talk about the government shutdown. This has been a big discussion among a lot of the airline CEOs, where they've said we just can't make up that kind of revenue. So there will be some sort of hit. Have you disclosed any kind of revenue loss as a result of some of the shutdown?
We haven't disclosed any kind of revenue loss. We've said that we remain on track for Q4, and I think we're pleased with what we're seeing in terms of bookings coming in for the balance of the month. We definitely saw some softness, obviously, during the government shutdown, but we're recovering coming out of that. I think most have shared that. But it was definitely an impact, and unfortunate that the airlines were put right in the middle of that shutdown. All the great air traffic controllers and the TSA workers, they need to be, cast as essential workers. We really need to make sure that, if anything, this industry is so essential to our economy. Think about all the people who are traveling for weddings and funerals or doctor's appointments that were displaced because we couldn't get on the same page in Washington, D.C. So we're really hopeful that, we've turned a page there and that we can move forward, looking at that end of January date with, a little bit of nervousness. But I'm confident that D.C. will pull it together and get us in the back end of that.
Yeah, you somehow, being an airline CEO, probably wasn't in your bingo card that you'd be well focused on healthcare legislation with your fingers crossed heading into January. I'm wondering how much you're hoping to attract a new class of customers versus capitalize on the ones that you have that might be willing and able to pay a little bit more with some of the new offerings.
Yeah, it's a little bit of both. We know we have customers today that want our first class product. And so it's really, offering that to them so that they can buy up when that opportunity presents it. But it's also making sure that we're competitive with the industry. Everybody's moved towards premium. We're going to continue to move towards premium because it is a resilient customer segment. But we're not going to forget the folks that fly in our coach product. They're just as important. And we want to make sure that JetBlue offers something to everyone.
It really does feel a little bit like the Sharks and the Jets when you speak to some of the airline industry CEOs, where they talk about, it's become a game of consolidation and it's become a game of the big fish really dominating the fields in a lot of different ways. They say it's going to be very hard to be a more budget-focused airline. How do you fight back? How do you sort of create a viable business model at a time when you do see this consolidation of profitability and travel in the biggest airlines?
I mean, it's definitely hard. We talk about the need for a more level playing field. When 4 carriers have 80% of the domestic seats, that's a real problem. You know, we fight very hard in D.C. to try to make sure that we're heard, that the challenges we face, whether it's cost pressures, the lack of scale, the lack of, consolidated purchasing, the, inability to get access to gates. We just bid on a gate, a Heathrow slot, and we were denied it. And so, while I maybe understand why it went to a legacy larger carrier, those are little things that add up over time. And the smaller carriers really need to be given a fair shot to win in this environment. And that's not happening right now. So we're focused on what we can control. We're focused on a whole series of initiatives under our Jet Forward program. It's getting us moving in the right direction. I'm excited about what it's going to bring. But we do need the government to kind of make that a more level playing field so smaller carriers can more effectively compete.
In the meantime, you do have this cooperation with United. You've been expanding in a host of different places. Is that the template going forward? Maybe not consolidation due to the recent issues, but in terms of the previous merger that was denied, but going forward, having some sort of partnership with major airlines to expand the routes.
Yeah, we've got 50 airline partners across the globe, and now we have the Blue Sky partnership with United. That is most certainly a part of trying to provide more utility to our loyalty program and providing a broader global network for our customers when eventually in Q1 they can book a JetBlue flight on United.com and vice versa through our interline agreement. And so we're excited about what it's going to bring. Does it solve the problem fully? No, it doesn't. But it's definitely a meaningful revenue initiative that gets us back moving in the right direction.
Do you anticipate consolidation at any point in your future, or is that sort of on the back burner?
That's on the back burner. We're really focused on Jet Forward. I'm really excited with the progress we're making. We're seeing it. We're seeing improved operational reliability, improved customer scores. We have not let the grass grow under our feet in 2025. We've executed a whole series of revenue initiatives. We've kept our costs under control despite pulling a 1.5 capacity this year. So 2026 really is the year that we should reap the benefits of all these initiatives that we put into place in 2025.
Before I let you get back to celebrating the new lounge, I do want to just ask you about the recent incident with a pilot for a JetBlue plane that was in the route between Curacao and JFK. There was a close call with a U.S. Air Force jet. Do you have any more information about what happened there to make sure that it doesn't happen again?
Yeah, I'm really proud of our pilot. He reported the event, and we train them for situations like this. We reported the incident to the government. We're waiting to hear the results of their investigation, but just pleased with how our pilot handled it and how air traffic control handled it. There's a whole series of safety nets in place in the in the national airspace system, and the pilot is the last line of defense, and he absolutely did his job, did it well, and my hope is that doesn't happen again.
Joanna Garrity, thank you so much for being with us.
Thanks
Joanna
so much.
Garrity, the CEO of JetBlue. I'll send it back to you.
Great looking lounge. Bloomberg's Lisa Abramowitz. Great interview. We thank you. Coming up, is the EV revolution stalling or shifting gears? That discussion next. This is Bloomberg Tech.
It's really about moving to more profitable vehicles. We're going to make in Tennessee now an affordable pickup truck. So these are going to be better investments for the company profit. And all those hybrid sales, those are really profitable vehicles for us.
The Ford CEO, Jim Farley, speaking with Bloomberg's Matt Miller yesterday, as the company announced that it's going to take a $19.5 billion charge tied to an overhaul of its EV business. For more, Bloomberg's Craig Trudell joins us. You cover all things automotive. And really, this comes in the context of the US and Europe re-envisaging what their relationship with the EV fuel is looking like.
Yeah, I think with what we've seen just in the last day and a half at this point, it's really a matter of sort of plenty of blame going around, right? This is a case where the consumer absolutely has not been ready to go fully electric. Universally, I think manufacturers like Ford have learned that the hard way, and I think they have some mistakes to wear here in terms of bringing out electric vehicles that were just too expensive, not supporting them with enough charging infrastructure. And then you have, I think, policymakers, too, where you have a lot of criticism of the approach that the EU has taken and the need on Brussels' part to kind of back down from this 2035 policy that, kind of all along was seen by the industry as really a stretch. And the closer we get to it, the more, real doubts have emerged about us being able to come anywhere close to that ambition.
And Craig, that ambition, just to remind us, was an effective ban on combustion engines?
Yeah, it was 100% reduction in emissions by 2035. I think you have to sort of throw it effective in there, and that there are, lots of loopholes and sort of ways in which you can sort of, preserve at least, some role for combustion engines with offsets and so forth. But this was absolutely going to be a very difficult ambition for this industry, and it will remain so even with some of these changes that we're learning about today out of Brussels.
Craig, this comes in the context, US, Europe, on this global pullback from green policies. But it also goes without saying that China has really made building affordable EVs very difficult to compete with.
Yeah, I think that's a really important aspect of all this. And absolutely, you have to, on one hand, give China credit for really sort of bum rushing this technology, building up this huge lead, both from a technology perspective, appeal, and being able to offer prices that the rest of the world can't match. I think what you have to ask yourself, though, if you're other governments in other parts of the world, is are you prepared to sort of allow China to sort of export its deflation to your markets when that is going to mean, a loss of jobs, a loss of industry. We've already seen enough, hollowing out in so many of these places, and a rise of populism, a rise of a lot of things that, have sort of been ugly for the world. And hence we get this pushback, we get these tariffs, and even today with the EU, sort of a means for quote unquote super credits that manufacturers will earn only if they make electric vehicles in Europe. And so that's going to lead to sort of some further support and sort of preference for domestic manufacturing over imports from China.
Geopolitics just intertwining itself with capital markets and with the auto sector. Bloomberg's Craig Trudell, thanks so much for breaking that down. Now, coming up, we're going to be talking with the CEO of Bespoke Partners about AI's impact on executive recruiting and the labour market more broadly as we digest, of course, unemployment rising yet again to a 4-year high in the United States. The Nasdaq 100 trying to take on the chin the labour market in the slowdown. We're off by 0.3%. The Magnificent Seven, as you'll see, on the downside. Semis under pressure. Check out Broadcom, off by 0.2%. They've had $1/3 trillion wiped off their market cap in the last 4 days alone. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Let's check in on these markets because we're trying to digest a relatively noisy report, as some people are saying, about the jobs market. Of course, this comes for October-November numbers. 64,000 non-farm payrolls increased in November, but the unemployment rate ticked higher, 4.6%. Federal Reserve therefore unlikely to do much on this particular current jobs report. So the market pretty sanguine, off by 0.4%. Bitcoin managed to ramp up almost 2%, 87,000 is where we trade, but it is under significant pressure as we end this year. And in fact, it looks to be 4th ever down year for the OG in crypto. But more broadly, we think about how US unemployment is factoring into market sentiment. As we said, the figure rising to a 4-year high in November. And while clear evidence of widespread AI-related layoffs hasn't quite emerged, more and more firms like these are pointing to the technology as they announce or plan for cuts. For firms hiring, AI skills are actually becoming a must-have. But could actually AI also help solve a potential leadership shortage? Eric Welzikowski is with us. He's CEO for executive recruiting firm Bespoke Partners. And really, you're thinking about the intersection of AI and the labour market. You're thinking about how AI can help with the job search, Eric. But first, your view on whether these jobs numbers and unemployment rate increases are in any way tied to AI and automation.
Caroline, thanks for having me on the show. Look, when I think about AI, it's definitely impacting the broader market. But I think that while payroll growth has stalled, I don't think it's collapsed. And I think this tick up in unemployment is temporary. And I think when we look at the last couple of years, we've had a tight monetary policy, high capital rates, low deal flow. In Q3, I think we started to see deal flow pick up, and I think we're going to start to see deal flow pick up from there. And from there, I think we'll see leadership change and then job creation.
Okay, so you're very much focused on sort of SMEs held by private equity that might be going through some sort of change and transition. But you've been trying to warn that maybe the leadership isn't quite there to stand into these sorts of periods of transition?
Well, what's interesting is deal flow finally picked up in Q3, and we're seeing the tightest labor market ever in executives for software companies. It's the perfect storm. As deal flow has picked up, demand for these executives has also picked up because we need new executives for new platforms. But there are about 13,000 companies in the private equity sector that need to exit at some point. There's light at the end of the tunnel. And so in a market where there's natural churn with executives, you have more executives now who are waiting for the exit in the next 12 to 18 months, putting a significant amount of pressure on these leadership changes.
So if there's people looking for an exit, does that mean we're going to have a glut of leaders coming onto the market because suddenly their businesses are sold? And do they have the right talents and the right AI talents to advise in the future and to take more leadership positions?
I think we are going to see more folks come onto the market, but I think it's going to take a significant amount of time to get through this private equity bloat backlog number of portfolio companies that need to exit. And so I anticipate 2026 and 2027 to be a very tight leader market. That said, we're paid to find the best of the best, and those folks are out there. The key is to make sure that you're looking at the entire market, and I think that's where AI really comes in and gives us the opportunity to determine who those right executives are.
So how is AI helping?
Well, it's interesting. When I entered the exec search industry about 5 years ago, I saw an industry where searches were done from the bottoms up, and the very best executive search professionals were only seeing about 20% of the market, because effectively what they were doing is they were going to a database of who they know. So we started a project about 4 years ago where we indexed the entire market for software executives in North America and identified all 700,000 executives that participate in the market. Those AI tools have then allowed us to determine who is particularly the best fit for the executive roles that we're placing.
Eric, fascinating talking to you in this current environment. Eric Mazurkowski, he's the CEO of Bespoke Partners. We thank you. Coming up, an important conversation from geopolitical perspective. Jacob Hellberg joining us, Undersecretary of State for Economic Affairs. He's also the founder of the Hill and Valley Forum. We're going to talk all things chips, China, securing the AI supply chain. This is Bloomberg Tech. In a latest move to secure the AI supply chain, the US government is backing a project by Korea Zinc to build a $7.4 billion smelter in Tennessee. It's the latest in a flurry of Trump administration measures aimed at establishing domestic supply chains for key minerals. Jacob Hellberg, Undersecretary of State for Economic Affairs, is leading one of those key initiatives, Pax Silica. I'm very pleased to say he joins us now, and you are all in on AI supply chain resiliency and maybe managing to ensure that China doesn't own it all. How does this particular Tennessee smelter speak to that initiative?
Well, Caroline, it's great to be with you, and it's great to be on your show. So during my confirmation hearing back in June, the Senate asked for a strategy, and the president's national security strategy gave them one. And every day, the State Department is wasting no time to give them results. Our economic security strategy is based on 4 pillars. We're rebalancing trade, and Secretary Lutnick, Secretary Besson, and Ambassador Greer have done a stellar job at renegotiating decades-long trade deals. We're stabilizing conflict zones. We're reindustrializing America to make sure that we maintain our competitive edge, and the deal with Korea Zinc is a major milestone in that effort. And ultimately, we're also securing our supply chains. Pax Silica provides the framework that allows us to work with our allies and partners to make sure that we can secure our supply chains in order to lead in the industries of the future. And we're very proud of the rollout of Korea Zinc. The Department of War was an instrumental pillar to the deal. And ultimately, this is the kind of whole of government approach that we're looking at advancing to advance our interests.
Talk about that approach. In this case, it feels very much more like public-private partnership on a particular smelter. JP Morgan's in there as well with its initiative. On other cases, you're actually taking stakes in companies that aren't even American. How do you see it being fit for purpose on each individual way?
So one of the reasons that we started the Pax Silica initiative is because the global supply chain is global. We wanted to get together with the Koreans, the Japanese, the Australians, the Brits, the Singaporeans, and Israel, because all of these companies bring unique attributes to the table. And ultimately, the deal with Korea Zinc illustrates the competitive advantages that some of our key partners and allies have in these areas. Ultimately, what we realize is that there is a new economic security consensus that's emerging across our allied space, that economic security is national security and economic policy is downstream of national security. And our allies are on the same page that this is not a line item, it's a prerequisite for national survival. So through Pax Silica, we're cooperating on economic security practices, as well as opening new channels for co-investment in fabs, data centers, as well as refining projects like the Korea Zinc refining facility in Clarksville. Ultimately, we want to pool together and leverage different investment vehicles that our respective governments have. In the US, we have the Development Finance Corporation, we have the Department of War, the Office of Strategic Capital. There are so many resources at our disposal. And most importantly, we have the world's best corporate ecosystem and innovation ecosystem. And this is where collaboration between allies, as well as between the public sector and the private sector, can really make a difference.
When stakes are taken, for example, we're looking at a graphic showing $400 million for 15% of MP Materials, some might say this isn't very pro-capitalism. How do you speak to that?
It's an investment in America. Ultimately, the Department of War needs various minerals in order to make sure that we have the best arsenal to deter our adversaries and maintain our peace through strength policy. It is in the preamble of our Constitution that it is a fundamental purpose of the U.S. government to provide for the common defense. And so the Department of War needs weapons to do that. In order to get the weapons that it needs to be able to have an ecosystem of suppliers that are reliable in times of peace as well as in times of war. And ultimately, the Department of War has demonstrated its commitment in order to use every tool in its toolbox in order to make sure that we actually have an ecosystem here in the U.S. that can guarantee our critical supplies for minerals, especially in a wartime. So we're very proud of this project, and it's going to have dramatic spillovers on the commercial sector as well.
Spillovers are on commercial sector. How much could we spill over in more countries joining? We're looking at the inaugural Pax Silica summit, the allies that joined, but some were guests as well. Taiwan, OECD, Europe in particular. Will more join?
So we do expect a number of them to join in the first half of next year. We're talking to a number of countries right now, including India, among several others. India is host to the AI Impact Forum next year. We're very much looking forward to participating in that. Ultimately, we want to make sure that the group stays focused on solving very specific challenges of supply chain security. So we approach every single partner very much through the lens of which companies are they able to bring to bear to the table in order to solve concrete challenges. That is very much our model. We expect to pursue that model, but we do realize that the meeting that we held was a first step. It's not a final destination. Now we're shifting towards implementation, and we will likely add more new partners early next year.
Many are watchful as to how much the EU will get involved. One key company in the EU is ASML. We spoke with the CEO recently about his own supply chain, US, China. Just take a minute to listen to this, Jacob, if you will.
Most probably, we need to develop a much bigger supply chain. So maybe not depending fully on China. I don't know how much we have in Europe. So that's also why it's important to keep some of those markets open. I think you're right. The interdependencies we have between, us, China, the US is being reminded to us every day.
Now, we understand that China has just started allowing rare earth export licenses to certain European companies in particular, and the top trade negotiator yesterday told us that things were looking up. Is it looking up for the US as well with rare earth metals, for example?
So we're seeing a very interesting debate take place in Europe, and Europe fundamentally has a choice between the loss of identity, the loss of industry, and the loss of borders, or they can choose regulatory simplification, energy abundance, and fair and reciprocal trade. There is an effort within the EU context aimed at regulatory simplification, which we find very encouraging. I will say we also find it very, very encouraging that there is a growing economic security consensus between the United States and Europe. And one of the examples of that is the fact that the G7 theme next year is global imbalances. And, as you know, the French government is not referring to weather patterns when they're talking about imbalances. It's referring to the fact that Europe is awakening to the economic security challenges of industrial over-reliance and decades of unfair practices. And we welcome that, and we want to work with them on that. The Netherlands did participate in the Pax Silica Summit. We want to deepen that collaboration. And ultimately, we view Europe as an important partner, and we want to work with them as they, are currently working through to solve their economic and supply chain challenges as well.
I mean, Jacob, many would say that Europe felt that your national security strategy, as was put out on December the 5th, was a real wake-up call. In fact, I think they saw it as a significant reorientation of US and its relationship with Europe. They felt sort of under threat and specifically criticized. How did you take on board that reaction? I think there is even the word used, civilization erasure, as you thought to tackle immigration or put your views forward on culture wars in Europe.
Sure. So the president's national security strategy was not an insult. It was a diagnosis. It was the fact that he laid out in clear and simple terms that there is a turning point that Europe is facing. It can choose managed decline, bureaucratic paralysis, or it can choose rejuvenation, secure borders, energy abundance, and fair and reciprocal trade. We have our disagreements with Europe on how they approach the technology sector. We think that they are way too heavy-handed from a bureaucratic and regulatory standpoint over cutting-edge technologies. We believe ultimately that when they take steps to go after our companies, they actually end up hurting themselves by deteriorating the investment climate in Europe. With that being said, we do have notable areas of convergence, including on economic security. They are now experiencing the economic security and supply chain challenges that we are experiencing. They are having healthy, open debates about supply chain security. And the theme of the G7 highlights where their mind is at. And so we do see a healthy terrain to engage with them on supply chain security. We hope to seize that opportunity and actually expand it if and where possible.
That time diagnosis, Jacob, you've been diagnosis for a long time, diagnosing the relationship, the security risks of US and China. You've been writing about it, you've been a public servant around it, you've done private company roles around it. What do you think the relationship with the US and China should be like? Because at the moment, the diagnosis is we're still dependent on 90% of our rare earth metals from there.
Well, ultimately, the president's been clear that we want to have a constructive, stable, and positive relationship with China. And we're going to do that all the while standing up for America and putting America first. And so he delivered a landmark speech back in July on winning the AI race. Our policy is we want to win the AI race because we want to put America first. And so we're never going to apologize or back down from defending American interests. We believe that winning the race has two main vectors. We need to have the best innovation and we need to have the most diffusion. And ultimately, we are pursuing a two-track approach to make sure that we expand our compute capacity here at home to have the best models in the world, all the while exporting our technology onto the world market to make sure that the world's developers are all building on the American stack.
Jacob Hellberg, great to have some time with you. Come back soon, US Undersecretary of State for Economic Affairs, of course, the founder of Hill and Valley Forum as well. Much more coming up. Stay with us. This is Bloomberg Tech. It is time now for Talking Tech. First up, President Donald Trump has filed a defamation suit against the BBC over an edit of his January 6, 2021 speech used in Panorama documentary. Now, according to the court filings in Florida, Trump is seeking $10 billion in damages, alleging that the edit falsely suggested that he issued a direct call for violence ahead of the attack on the US Capitol. Plus PayPal, well, it's applied to become a bank in the United States. The payments firm is looking to take advantage of the Trump administration's openness to fintech companies entering the banking system. The company says if approved, a PayPal bank would help strengthen its small business lending capabilities. And the NASDAQ is looking for regulatory approval to extend its trading hours to 23 hours during the work week. According to the filing, the firm has asked the SEC for permission to add an additional trading session from 9 p.m. to 4 a.m. Eastern Time. Now let's talk social media and Instagram. It has just unveiled its first dedicated TV app. It lets users watch short-form video featured Reels on a larger screen, something Instagram head Adam Mosseri hinted at earlier in this year during our Bloomberg Screen Time event. Bloomberg's Kurt Wagner was the person interviewing him at that Screen Time event. You cover all things social media. So any big surprises here?
No, not exactly. A little faster, honestly, than I thought. If you remember when we chatted with Adam Mosseri in October, he kind of hinted that this was something they were looking toward. Here we are just 2 months later. They do have this app that they're debuting. The one thing I'll point out is that this is just for the Amazon Fire TV right now. I imagine that they want to create this app for all those different smart TV platforms. So, sort of limited in scope at the moment, but obviously the plan being to expand this quite aggressively.
And you just think about how already YouTube has dominated so much of our attention span. We're looking at TV. We're all thinking about Warner Brothers Discovery and what that means in terms of competition. But there's a lot of competition in terms of social media as well for our eyeballs and for our wallets, Kurt. What are you making of TikTok ever more encroaching on our wallet and on shopping?
Yeah, there was a great story by our colleague Alex Levine this morning about the rise of live stream shopping on TikTok. It's a kind of a format that is very popular in China. It is responsible for hundreds of billions of dollars in annual spend in China. It is not translated to the US despite sort of efforts from YouTube, from Meta, from other big tech companies over the years. TikTok is having a little bit more success here. The story highlights some of the small mom and pop shops that are really seeing great sales on TikTok Live. Kim Kardashian just did a holiday special for her Skims company. So it feels like maybe TikTok is having a little bit of success where other larger tech companies have not. And I have to imagine that's just because people are so used to scrolling, so used to being entertained on that app that when you throw in sort of an entertaining infomercial, it doesn't feel so out of place to users.
What's interesting, of course, TikTok used by about half the country. There have been so much concern and anxiety by those dedicated users that TikTok was going to be kicked out of the United States. Have they been able to ramp up other parts of the business model as that anxiety seems to have dialed down? We're just getting extension after extension in terms of whether or not it'll be allowed to serve here.
Well, what's interesting is they didn't seem to, pump the brakes on live shopping at all, despite this kind of cloud hanging over the company. Now, I think we can all probably agree at this point that a ban seems very unlikely. President Trump has now extended the deadline for them to sign a deal several times. He clearly does not want to ban this app, but they were kind of pushing this forward regardless, and I think they're now benefiting from that.
Well, Snoop Dogg seemed to be doing cocktails with Kim Kardashian via TikTok, so brave new world, as always. Bloomberg's Kurt Wagner. Great to have you on all things social. That does it for this edition of Bloomberg Tech. But don't forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. And go check out our socials too. This is Bloomberg Tech.